Hi and welcome to another edition of Weekly Market Reports by tradersclub.co.uk. As per usual, let's start with our disclaimer. Anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your trading or investment. We are simply sharing the information for the benefit of the club members. Okay, let's start our analysis purely by looking at some technicals. This is S&P 500 weekly chart, and as we can see, there is quite a bit of resistance overhead. We had 7 consecutive weeks of price gains, and however, although this appears to be still bullish action, I'm a little bit cautious purely because these kind of hammer formations and a doji formations on a weekly time frame usually indicate some kind of exhaustion and tiredness. Bulls are getting tired of pushing the price higher. At the same time, hammer candlesticks are very bullish if we can see them at the bottom of the trading range. If we see them at the top of the trading range, in addition to overbought indicators, in this case stochastics, it's usually a warning flag for me. That candle was followed by a doji candle, so I would like to see what the next week might bring. Price can still push higher without any problems. However, we would need to see a weekly close above this level, which is 1524. The daily time frame for the same index, it's showing higher highs and higher lows, clearly defined uptrend. We have a rising resistance trend line here as well. Indicators like MACD and stochastics are at the overbought levels and crossing. Price action is clearly supported by this rising 9 EMA moving average. Although we can see a number of doji candles at the top, so the narrower trader range and loads of indecision. And I'm keeping an eye on RSI, which is creating a lower high. So this potentially could indicate a negative divergence. The loss of this 9 EMA level would be a first warning sign for me. S&P 1 hourly time frame, we can see that the breakout above this longer term resistance level of 1515, and then subsequently we came back down to retest it as a newly formed support on a number of occasions. The price action extended to our R2 level, resistance 2 level based on pivots at 1524, and it kind of stayed there, and it appears to kind of look like a double top at the moment. We had quite a bit of selling on Friday, but the markets kind of recovered in the afternoon and managed to close off the lows. The levels that I'm watching at the moment on the way up would be obviously 20 period moving average followed by the cluster of these previous highs here, but definitely 1524. This level here is a major resistance currently. If we successfully move higher than 1529, potentially could be another level of resistance. On the way down, if 1517, obviously Bollinger Band and 50 period moving average would be a major support, followed by this 1515 level, which is dotted blue line, followed by 1510 level, which is this rising support trend line as well, and some of the previous highs as well. So these will be the levels for support. 15-minute time frame, clearly indicating that the price action on Friday, it could be ABC retracement, supported by 200 period moving average on 15-minute time frame. We had stochastics curling over and crossing. Pivot lines are indicating the initial support and resistance levels. So if the price moves higher, obviously we have to be careful because on Mondays US markets are closed because of the bank holiday, so whatever happens in Europe will definitely influence futures and when the trading reopens on Tuesday. So Resistance on the upside is clearly located here at 1523.78, followed by 1524, followed by 1529. Alternatively, if the price moves lower than 1516, which is 200 period moving average, it's the logical support, followed by 1514, which is the cluster of these previous highs, followed by 1510, 1509, 29. So these are the levels that I'm watching on intraday stuff. I've published this chart as well because it looks interesting to me at the moment. FTSE, it looks like a much stronger index. DAX, which is a German 30 index, appears to be forming a head and shoulder pattern, which is usually a topping formation. We did not get the confirmation of that pattern yet. Only the successful breakdown below this clearly identified neckline would confirm this pattern. RSI is creating lower highs and a crossing downwards from the neutral level. MACD is doing the same thing. We can see the histogram is actually moving lower as well. And stochastics is doing exactly the same thing, lower highs and then move to the middle, crossover again, which is quite bearish for this index. Price can move higher. Resistances on the upside are clearly located at 7668, which is 50 period moving average, followed by 7710, which is 20 period moving average, followed by 7737, which is this previous peak before we move higher. Alternatively, if we move lower, this falling support trend line, which is the neckline for this head and shoulder pattern, and also 38.2 fib retracement from this low to this high happens to be around the same level, so 7523. The loss of that neckline would potentially target 7478, which is the cluster of this previous highs as a level of support, followed by 7414, which is 50 period fib retracement, followed by 7304, which is 61.8 fib retracement. So quite tradable, loads of levels. Copper, we created a breakout above falling resistance and subsequent retest of that previous resistance, now newly formed support. Support on the downside is located at 372, which is 20 period moving average, followed by 3.7, followed by 368. All of these levels would be logical support before we kind of attack these lows and even attempt to talk about 200 period moving average on the way down. There's a massive rising support trend line here as well. Everything is in neutral, so it can accommodate move up and down. Alternatively, if the price action moves higher, 379, which is the previous high, would be logical resistance, followed by 3.82, which is this high here, followed by 3.84, which is alternative high as well. Gold, we saw a massive sell-off in gold. The loss of this 1626 support level was quite concerning, and then we saw a vicious sell-off. At the same time, we had Ben Bernanke from Fed Reserve speaking, and obviously his comments were indicating that potentially during this year, 2013, we might see the end of QE3. Therefore, dollar rallied and gold sold off significantly. It closed off its lows on the day. Stochastics is currently moving into oversold territory, same as RSI, not there yet exactly, but very close to it. If the price moves higher, logical resistances on the upside are located here. 1626, which is this previous low, followed by 1634, 35, which is this other low. Only the successful breakout higher would potentially target 1663, which is the cluster of 20 and 200 period moving average. Alternatively, on the way down, this falling support trend line must hold. The low of 1598 must hold. Otherwise, there is nothing to stop this price attempting to go much lower, apart from the cluster of these previous lows around 1540 7. The major support, major support is at 1530 level, 1526, 1533 levels. Even if you open up your monthly and weekly charts, you'll see that level as a significant support level in the past. Seriously worrying development for gold. Now, WTIC or NYMEX traded oil could not sustain itself moving higher. We had a bit of a pullback from 98 level. This appears to be a double top. We don't know. Move higher. We would find resistance again around 98.05, which is the upper Bollinger Band, followed by 98.24. Only the successful breakout higher would target 100.42 level, which is this previous high. There is another one above here, which is 106 level. But before we get excited about it, I would like to see the price moving higher. Alternatively, on the way down, this 95 level is quite a significant level of support, followed by 93.66, followed by 93.49, followed by 93.08, which is the 50 period moving average. Overbought moving to neutral, overbought, all moving to neutral as well. US dollar, obviously we saw a successful breakout higher, helped with comments from various Fed sources. If the price moves higher, logical levels of resistance would be around 80.90, which is 200 period moving average, followed by 80.86 as well, and 80.90 fairly close together, followed by this 81.45. Alternatively, if we see a bit of a pullback, this falling trend line, which was previous resistance, now newly formed support, would act as a support, followed by 80.18 level, followed by 79.86. Warning flag, stochastics is at the overbought level. This is it for today. Hopefully you enjoyed it, and stay in touch, and I hope to see you next week. Thanks, bye.